Hi, it's Stan Reinford, and welcome to this week's market update for July 8th. Hope you had a great holiday weekend. So, we've got a lot to cover here, so I'm going to jump right into it this week. Again, thank you for all the great conversations, great questions, and great suggestions. And thanks again for the great feedback using the 10-year. In fact, that's what we're going to be looking at here today, as soon as I can get it on the right one here. So, to the left here, we have the 30-year Treasury. To the right, or to the center, we have the 10-year, and then to the right there we have the S&P 500. So if we look down below, we've got the candlesticks. So remember, on the 10-year, we don't want to see green, we want to see red. Green means that rates are increasing, red means that rates are decreasing. So right now, we're up higher than where we've been. In fact, we're the highest rates that we've seen, since about May 21st. Again, they will come back as hopefully you know what's happening out there and you've been watching the news, but the U.S. is obviously stopped the ceasefire. In fact, as of this afternoon, the U.S. has supposedly struck Iran. Again, just on the heels of Goldman Sachs saying that they anticipated that oil was going to be coming down to $60 a barrel, and that OPEC was talking about gearing up production. We have this all happen over there. We had pre-war, there was about 125 ships going through the Strait of Hormuz. Then it went down just recently. It was around 25 to 60. Well, in the last 24 hours, there's supposed to have been somewhere around 7 ships. So again, when oil prices go up, causes inflation, which causes higher rates. In fact, when I drove past the gas pumps this morning, saw that prices were up about 30 to 40 cents from the end of last week. So again, hopefully it's only temporary. Fingers crossed. We'll have to wait and see what happens. So let's talk Fed. So the Fed has now predicted, or some of the Fed members have predicted, that instead of 2 rate hikes, they're looking at 1, a bit hawkish there. So hopefully there's none. Again, we'll have to wait and see what Kevin Warsh is thinking and doing. And again, remember, the insight that we're going to be getting is probably very limited compared to what we've been used to in the past. So they'll probably have to read between the lines a little bit more. Last week we had Beth Hammack, who made some comments about inflation. Now we just had ex-president James Bullard, who made some comments which were not actually really good for the markets. But again, he's somebody that loves the limelight in the press. He did when he was there, and he certainly looks like he does now too. So the BLS came out with their numbers the other day for the June jobs report and showed that they're about half the amount of estimates, somewhere around 57,000 jobs that were created. The previous month was revised lower. Most of those came from education and health. The biggest one was a reduction in leisure and hospitality, when everybody thought that that was actually going to be higher due to the World Cup. And then ADP released their report ending June 20th, showing that there were about 20,000 jobs per week. So somewhere around 80,000 jobs for the month, which is down from previously. And then some of the previous reports were revised down also. Let's talk housing. So Cotality came out with a report that showed that housing for the month of May, or home prices for the month of May, rose about 6/10. So imagine that. We're in a higher interest rate market, and values are still rising. Now, again, national news is not always local, and we've got other markets across the country where values are coming down. But overall, think about that. What's going to happen when rates do come down, when oil prices come down, and then there's more competition coming in the market? That's going to cause more appreciation. So imagine if you're buying a house today, get the house today, and then that home is worth 5 to 10% more down the road. That's equity that you can use when you're refinancing to help reduce your interest rates and everything else like that. So again, keep that in mind, that if you wait and sit on the fence to buy down the road, that home could cost you a little bit more, even though rates come down. Let's talk student loans. So the Biden era Save a Loan program has ended as of July 1. And what's happening now is those people that were in deferment or forbearance are supposed to be getting together with their student loan companies and reaffirming those loans, getting into new programs. But what's happening though is there's a lot of people that are 30, 60, or 90 days late because they haven't gotten that information. Again, everything that I've read says you should be checking your spam folder, checking everywhere, because a lot of that is paperless today. So you want to double check on that right away. Or if you know somebody in that predicament, let them know that they should be doing that. Because again, remember, student loans, if you're not paying them, they can be garnished from your wages without your approval, without anything. So um, let's talk interest rates. So again, interest rates, as we're looking at the chart here, yes, interest rates went up a little bit. They're going to be cyclical here. A lot of people really didn't think and didn't have confidence in this whole ceasefire with the Middle East and the whole memorandum of understanding and everything that was behind all that. So they were waiting, and that's one of the reasons that that interest rates probably haven't come down as quick as you would have thought, because there was a lot of people that a lot of the markets that did not think that this was going to continue. So interest rates are in the upper sixes. Again, there's about 15 things that go into pricing a loan. So if you're looking at buying a primary residence, second home, or investment, give me a call. We help in every way, whether it's a reverse mortgage, home equities, first-time home buyers, move up, move down. If you're self-employed, we've got some great programs. So if you're self-employed and you've been turned down by some other lender, especially banks who are very conservative in their underwriting, give us a call. We've got some great programs out there. Have a great week. Please forward and share, and I look forward to seeing you next week.